Welcome back everybody into another weekly recap. So this week was from the 23rd of January, Monday, till Friday, which was of course the 27th of January. And what we're going to see, this is on the 5-minute chart, is the movement of gold. And we're going to see between the key levels, the PSAs, and the actual fundamentals of this week. So as we can see that during the Monday start of the markets, opening of the markets, we see the pullback to a high. This is a 4-hour PSA. 4-hour PSA. And you can see that we get this rejection, a dip down below, we break and make new lows. And that's where we see the first, not even the first, but this huge band, which will play a huge role during the whole week. That's where we have the first tap from the first rejection. This is from 1920 till 1929, and that's where we can see that the price still got rejected. And I think that we can see that even on the 5 minutes from this price point, making the new low, that's exactly a 61.8 retracement, which is also matching the actual key level. As you can see here, if you place it correctly, it's exactly 61.8, matching the key level for your entry for trying to make a new lower low. As you can see here, price actually makes a new lower low, and this is the during the New York session of Monday, but where we are bouncing from key level 1912, I guess, yes, 1912 key level. If we place here the price label, yes, that's 1912 key level, and we see that from here we have a huge bounce, huge snap back, which will move the price up like 280 pips. But always, okay, we see huge aggressive movement. We see the retest of the band. This is going to be a huge band during all the week in continuation up. Then we see price making retracing most likely 50% of this movement. Yeah, as you can see, this is a 50% retracement, which is also matching up with the previous price point of interest. And again, also this was the case here. As you can see, the retracement was exactly there. Okay, let me just move it back here, and that's where we ended up making a new higher high. As you can see, we are making a new higher high. Then we could possibly take another. This is 75% retracement for a quick scalp up to the key level. If we look at it, this is still a 40 pip range. But then when we see the price is failing to make a new high, as you can see, we are very close to the strong 4-hour PSA. We are failing to make a new higher high. We see that the price is actually making a lower high. It's a correction, when we can validate only when the price breaks below. But then when we see the price breaking below and retesting here, if we go on the 1 minute, this is a retest of this level multiple times. Then price is making an aggressive new lower low, and then that's when we have a fundamental report, which is the composite PMI. The composite PMI, as you can see here, on Tuesday came up much improved, much more better than expected, even much better than prior. That means that is a very good thing for the US dollar, and that's where you have this aggressive move of around from 1933 to 1917.7 is a huge move, 160 pips in the span of half an hour, 40 minutes, half an hour. And then of course this huge liquidity area, which is a demand area, and also matching the trend line. That's where we have a huge snap back up. But still, if you zoom out, you see that we are still failing to break above these highs. So you see the rejection at 1939. Again, if you come here and you see, this is of course doing Asian session, so I don't trade it, but if you come here and you make your analysis, then you have this previous high that could have a rejection purpose, could have a rejection liquidity, sell side liquidity. Then what you see is that this is doing London, pre-London, we have the breakout, we make a new lower low, And then when we fail multiple times to break and make new highs above this, as I said, this is a 4 hour PSA. When we fail to make a new high, that's where you can take your sells on the downside. And again, that's even, I think this is, if you look at the last impulse and you look at the retracement, yeah, this is a 50% retracement, and it's a nice 60-70 pips scalp on the downside. But again, you have to be aware where is price going. Okay, yes, it's bearish, yes, it's very strongly bearish, but you understand that this liquidity area is still there, hasn't been broken in a while. We are on a bullish trend line, a bullish bias. So as you can see here, almost the same that happened in the previous days. Then it's early, this is the new 4 hour. We make a new lower low, but we fail to close, we fail to have a consistent price action at this level. So that means that the buy side liquidity has not been absorbed completely, and actually it's very strong, and we will see later in the week that will be stronger and stronger. But then what we see is that we make a new higher high, we break above this level, we retest multiple times the key level 1929, and then we end up making a new intraday higher high, and actually end up with a double and triple top over here at 1948, which is still a huge price sensitivity area that has not been broken yet, as you can see here. And after that, again, when you understand that this is exhaustion, yes, this is order block, you might think about that this is exhaustion, but it's only when the price breaks the previous lows then you can understand, okay, and now this was not a consolidation to continue up, but it was a consolidation to break below. Of course, then you see that we have made a new lower low. You can even take the retracement tool and see that this is a 61.8 retracement on the downside to then make a new lower low. And then when you see, also fueled by fundamental report, that's where we can make another retracement tool, 75% retracement exactly on the dot, even for this impulse, and this impulse will immediately go back to the previous demand area, 200 pips. The GP showed some shrinking, better than forecast, but still shrinking from the previous, and that gave USD dollar strength because of was better than forecast. Probably we don't have any absolutely good news or good 100% certainty about that, but that's the main point. That's what the market showed, that's the impact that it had, and of course also technically that's what made sense. And again, you have a snapback showing you that the liquidity from this area is still strong, but of course you have like a 50% retracement of the overall price action, even 61.8 retracement of the old price action, and you have this is doing Asian, this was the late Asian, that's where you have your strong confirmation of sell bias. The next day you have multiple break and retest, failing to break on Friday morning and trying to make a new higher high, but as you can see we are failing to break above the previous highs that we made yesterday. This retracement level, we failed to break above it, and that's where we had another attempt. So overall, yes, we are just in a range, but you can see how this failed to break. That's where you can see how with key price point of interest and understanding the market, then where you can still have a huge and profitable scalp system. And again, understand that 1917 has never been broken. This is a double, and that's why you have all the snapback up again. So that's again huge area of interest. Let me just mark it up, and that's basically saving them there. Okay. Okay, so I guess that I can do like this. No. well, I don't know. So that's basically what happened today. And as a recap, we had some interesting price point of interest. We had this one, 61.8. Let's put it 12. Key level, break and retest of key level slash demand area. Then what we add, fail to break, demand area tapped. Okay, I mean that's what's happened today.